Offset accounts are something that everyone loves to talk about when you get yourself a mortgage, but not many people actually know how to use them. In this video, I'm going to break down exactly why you should use and how you should set up your offset accounts to actively save you interest and years off your loan term. Whenever I meet with a new client, particularly a first home buyer, I like to say that a high interest savings account means absolutely nothing when you have a mortgage. If you're going to have any sort of liquid cash, this should definitely be sitting in an offset account if you have one. With a savings account, you are actively earning interest. And when you earn money in Australia, that interest earned is taxable. When it comes to the end of financial year, this income needs to be declared and it gets added to your taxable income and is subsequently taxed by the ATO. When you have a mortgage and you put that lump sum of cash inside of your offset account, you are actively saving interest day by day. The interest on your mortgage is calculated daily, which means the more money you have in your offset account or offset accounts on any given day is actively saving you money and then actively saving you time on your mortgage term. Now, something to wrap your head around is that you won't actually see the dollar amount that you are saving inside of your bank account with usable cash. That only happens with a high interest savings account. But that's not because we are earning interest, it's because we are saving interest. In my opinion, the biggest upside of using your offset account effectively is that you are saving time on your total loan term. Now, on a standard $600,000 mortgage with an average interest rate, if you simply put $100 a month inside of your offset account and never touch that money for the full length of your loan term, you would save close to $57,000 worth of interest and 2.5 years on your mortgage term. And this effect compounds with the frequency in which you contribute to your offset account. If you change that to $100 per fortnight, you'll be saving close to 8 years on your mortgage and almost $200,000 in interest. Now again, you won't be seeing that money inside of your bank account when you are actively saving the interest like you would if you had a high interest savings account. You can usually keep a track on how much you are saving in each statement period inside of your bank statements on your banking app. The best thing about offset accounts is by nature, they are actually transaction accounts. And most banks, not all of them, will allow you to have multiple of these offset accounts. All of these transaction accounts can have a debit card attached to them if you so please. I'm not sure I would do it for all of my offset accounts because I don't simply trust myself having access to the money in what should be technically my savings account. There are some banks that will allow you to have 99 offset accounts. I'm really not sure why you would have that many offset accounts. I think personally the sweet spot is about 3. You have your spending account where you spend your everyday money out of and get paid your salary into. You then have your savings offset account, which will have the bulk of your savings. And then you will also have a holiday fund. Well, at least I do, because I like to save up separately to my normal savings for a holiday. We've all read The Barefoot Investor, so when you bucket your money, you can have the same structure that you run now with offset accounts attached to your mortgage. Now, of course, this isn't a strict way that I recommend you do it. It's just simply what works for me and a lot of my clients. Again, you can set this structure up any which way you please, provided all of your accounts that you set up are actually offset accounts. The reason I like to get paid a salary into an offset account is because every day we have money inside of those accounts, we are actively saving interest. It might be a frequently used bank account, but that's okay. As long as there is a dollar in there, it is actively saving you money without you even trying. Another top tip is to not have debit cards attached to every single one of those offset accounts, simply because people can't be trusted when money is super accessible. So I suggest usually putting at least one barrier between using the money that is in your major offset account and the transaction account. If it takes time for you to go into your phone, your banking app, click the transfer button and send it across, you will hopefully think about that purchase a little bit more before you actually spend the money. Offset accounts are different to redraw accounts, and you need to practice a little bit of discipline because it is very accessible. Now, it's also common for people to have one offset account that is able to be attached to your mortgage, and that's okay. My suggestion here would just be to put the maximum amount of money you possibly can into that one account. That way you are saving the most amount you possibly can. Some people like to set up a credit card for their everyday spending and put all of their money inside of that one offset account and then pay that credit card off at the end of the month so they don't incur any interest. This is a risky strategy because people sometimes forget to pay things on time, they get a black mark on their credit score, or simply they just buy a bigger purchase because, hey, there's $6,000 available on this credit card and I'll just spend it and pay it off and that'll be okay. Sometimes credit cards can open you up for more spending. You need to be disciplined when it comes to your money and how you use it. Before we get to redraw, I want to sort of illustrate what an offset account does to your repayment, especially if you're paying principal and interest. You need to imagine one big square. There is a line through the middle. The top half you're paying the principal and the bottom half is the interest. The more money you have stacked aside inside of these offset accounts, the larger the principal portion gets and the smaller the interest portion gets. This is how we actively pay down the loan faster because we are attributing more of our repayment to the principal of the loan rather than the interest charge from the bank. Why not just use a redraw account? Well, I don't have anything inherently against a redraw account. I just think having flexibility over your money in an offset account is a better way to do it. Now, redraw will allow you to actually save interest the exact same way that an offset account will. However, I imagine redraw as the bank's bank account and offset accounts are our bank accounts. When you have money in redraw and you start changing the purpose of the property in question and you take that money back out of it again, you can create some sort of tax implication. Now, I'm not going to give tax advice on this channel. I encourage you to go and have a chat to your accountant if you're thinking about using your redraw account. Now, some banks will put restrictions on how you can access and withdraw your money out of your redraw account. It's not overly restrictive, but it's something to be mindful of if you're wanting to use a redraw account. Now, someone in the comments is going to say, hey, what about the fees attached to having an offset feature on your mortgage? And of course, we need to take into account the money that we spend on fees when it comes to applying an offset package to our mortgage. But in my opinion, that is a small price to pay to have ultimate flexibility over your own money. If you enjoyed this video, please hit the like button, subscribe to my channel. It really gives me the encouragement to continue making these videos to help educate as many people as humanly possible on these platforms.